I think a better approach to address your issue is to look at how well the stock market has done when conditions weren't as favorable as they are now, rather than to criticize it or talk about inflation or other broad topics. So, I would say that 4,000 is a feasible goal, but I still believe it has to go much higher in the long run. When you're at your peak, there's really no resistance, aside from a psychological number. Consequently, choose 4,000. Indeed, it will be a rounded figure and everything. The financial markets have viewed gold with extreme suspicion. Assumingly, 0.5% of all portfolios contain gold in some form. Consider the impact if everyone stuck to 1% or 2%. In the grand scheme of things, it's still a highly promising market. A rebalancing of the world's financial system is beginning to resemble gold's inexorable ascent rather than a rally. Market veteran Peter Grandich told Commodity Culture that the move is not only justified, but it may still be in its early stages, given prices now hovering just under $3,600 an ounce. The metal increase validates a theory that Grandich has been hammering home for decades, according to him. Grandich famously left conventional equities and bonds over 5 years ago to concentrate solely on actual gold. There has never been a better opportunity to invest in gold, the original and only money. A remarkable irony is brought to light by Grandich. Even if gold has done better than bonds and stocks during the new millennium, few North American investors have actually invested in it. He points out that, unlike Americans, Chinese families don't think twice about using credit cards to buy gold on weekends. Stocks and bonds are still touted by Western financial consultants as the sole sustainable long-term investment options, despite the fact that many of them are too young to have experienced previous cycles. According to Grandich, one of the reasons the gold trade is so influential is because of this gap between fact and perception. Further, the seasoned analyst drew a comparison to the early 1980s, when the then unknown Robert Prechter stunned Wall Street with the then ludicrous prediction that the Dow would surge to $3,600. Naturally, history confirmed his correctness, and Grandich observes a comparable level of skepticism in the modern gold market. Even while some may think the price is too high, he maintains that the fundamentals supporting gold are stronger than ever before due to factors such as central bank accumulation, de-dollarization, and the erosion of fiat credibility. Now that mainstream capital is starting to pour into the industry, his base case predicts that gold may reach $4,000 with plenty of room to grow. The excerpts from Peter's interview are now available. Please subscribe to our channel, click the bell symbol to receive timely updates, and watch the video before we continue with this discussion. So consider this. If I veer off course for a second, Jesse, some people at the bank will interpret it that way. No, they are wrong. This is the big picture. To begin, while I have been a financial advisor for 41 years, the vast majority of today's clients were either babies or toddlers when I began, and many of them have only begun practicing since the turn of the century. However, when you inquire about the most successful investments, the vast majority of people will mention stocks, with bonds coming in a distant second. Despite gold's superior performance, none of them bring it up. However, as you mentioned, there is still a lack of significant interest in the North American market, even as we reach $3,600. It seems to me that there is when you travel to different regions of the globe. I know you've heard this before, but on weekends people in China go gold shopping. Here, we waste money on unnecessary purchases at the store. I simply believe in the foundation. Even though the cost has increased, this is crucial. I realize that not everyone may agree with me, but I think you should listen to me. A lot of people thought stocks were dead when I first got into the industry in the early 1980s. In a span of 13 years, the Dow never budged from its 700 to 1,000 range. The stock market is dead, according to a famous Businessweek front page. Extreme pessimism pervaded Wall Street. Meanwhile, a young man from Gainesville, Georgia, called Robert Prechter Jr., whose Elliott wave theory was both a philosophy and a technical analysis that nobody really understood, predicted that the Dow will go to 3,600, and they proceeded to accuse him of everything imaginable by simply prosecuting him. He rose to fame as the market went off. In 1987, he and I were among those who made a call on the crash. People thought it couldn't possibly reach 3,600, much less 36,000 and beyond a few decades later. At this very moment, that exact sentiment is priceless. This is completely unacceptable, particularly from individuals who have a history of being aggressive with property. Sure, that's fantastic and will explain everything, but how could it reach even greater heights? It just isn't feasible. That same philosophy must be yours. It seems like it should be able to. I would even go so far as to say it's no longer inexpensive. Someone noticed the tripling and was planning to buy it for 1,300. However, gold's underlying case has never been stronger. At one point, central banks were suppressing our currency in order to sell it off. Today, they are the most avid purchasers. Obviously, no civilization had ever thought it was money. Obviously, it's money in Asia, especially China. One of my main reasons for being bullish on gold is the BRICS, but another is that I saw de-dollarization, the trend of countries economically and monetarily shifting away from the US dollar, as a positive development for gold. The most essential thing to remember while answering your question is not to complain about inflation or overall economic conditions, or even to be critical of the stock market, but rather to recognize and appreciate its performance in less favorable times. I still believe it needs to go much higher. Therefore, that would be my argument. I believe 4,000 is a fair goal, even with overtime. When you're at your peak, there's really no resistance, aside from a psychological number. For example, if you want to pick a round number, go with 4,000. The financial markets have viewed gold with extreme suspicion. Assumingly, 0.5% of all portfolios contain gold in some form. Consider the impact if everyone stuck to 1% or 2%. In the grand scheme of things, it's still a highly promising market. I see your point. It was lucrative to consider it a second-class citizen to gold, so I did a complete U-turn. However, in the 41 years that I've been involved, the fundamental argument was never stronger than earlier this year, when it dipped below 30. Thus, I metamorphosed into a silver insect. On top of that, I mentioned that it will likely continue to be a gold mine for a long time. And I believe that is indeed the case at hand. I must say, your observation is spot on. For those who insist on bringing up the Hunt brothers and how they once performed at 50, I must admit that you are correct. In order to account for inflation, it will likely need to trade at 200. I have stated that a target price of triple digits for silver is reasonable, which will likely categorize me as a silver bug. Let me start by saying that it's hardly more than a doubling from where I am. It was in the single digits for a long time, so the low price makes it appear high. However, I believe it has all the makings of a gold-based market leader. I can't leave out the stock market rivalry for it either. A few weeks ago, I made a significant adjustment. I wanted nothing to do with the stock market disaster. The stock market will be either flat or slightly up in January, according to my prediction for our clients. My advice was to put money into global funds and stay away from US stocks. Markets in China are my favorite. However, a few weeks ago, everything was screaming that we were extremely susceptible to a severe drop or possibly a crash, and it has been a threat to cryptocurrency and precious metals. So gold and silver could be targeted if the bull run slows down or if there is a real downturn, provided it does not lead to a complete disaster. Do you know, Jesse, how I know that? In 2013, I stepped away from the metals and mining industry as my primary business focus. When I started really aggressive with gold and mining stocks and everything about 5 years ago, I dove in head first. However, I've been getting messages in the past several weeks from folks I haven't heard from in at least 10 or 20 years. If the rise of gold is making headlines, the return of silver is taking center stage. The metal has broken through a long-standing barrier with prices breaking $40 and shown the ability to continue rising. Once dismissed as the kissing your sister trade, silver is now spearheading current bull cycle, according to Peter Grandich. The thought of silver reaching triple digits is more plausible than most investors are ready to believe. As he points out that the 1980 peak, which was near $50 when adjusted for inflation, would be closer to $200 today. Beyond its monetary role, silver's demand is being more and more linked to vital industries such as solar energy, electric vehicles, and advanced electronics, which provides a strong foundation for its price movement. Similarly remarkable has been the resurgence of the gold and silver mining industries, with ETFs such as GDX and SIL seeing gains of over 80% this year, far outperforming the S&P 500 and Nasdaq. Nevertheless, the mainstream media pays little attention to the bull market, even though it has generated enormous gains. It's as if Wall Street is stubbornly refusing to accept reality. According to Grandich, this skepticism has created a perfect opportunity for investors who see the potential. He thinks that if big institutions and financial advisors, who have long neglected precious metals, start investing in the sector, it could trigger a second, even stronger leg higher. This would transform today's rally, which has been overlooked, into one of the most remarkable investment stories of this decade. The mainstream US financial media is very much in the pocket of the banking and insurance industry. Since I've been working in this field, the financial services industry has viewed gold and silver like kryptonite, so I never expected them to write positive stories about it. Their marketers aren't going to write against it either. I don't think it will change unless the public takes a stand and says things like, "Hey, listen, I'm listening," or "I have a neighbor who is killing it," etc. In my opinion, that is when people will start paying attention to it. I will deal with both the mining equities and the exploration stocks. They are distinct animals. As I mentioned before, the mining stocks have a long way to go before they can claim to be printing money through legitimate means, free cash flow. But when I sold some physical gold at $3,500 last year to buy shares in the major gold producers, their performance far surpassed that of physical gold. And what will happen to them and what will keep it going is that as the stock market cools down and more companies fail to achieve low-end earnings expectations, they will always have the opportunity to claim victory. These mining businesses will be heard by these generalist money managers. Case in point, Newmont Mining. As we speak, the best performing stock in the S&P 500 might be Newmont if Palantir takes enough hits and the company continues to rise. At the moment, it's ranked second. Therefore, it is outperforming 498 other equities based on broad market conditions.